Traders, we'll be getting started in just a moment. Please take a minute to read this disclaimer. All right. Good morning, traders, and welcome to this weekly technical outlook. Today is Monday, June 15th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the week with you guys, and what a week it is. On the back of last week where we got that massive IPO, guys, really kind of offering some major rebalancing, but the markets are still on steady footing. Obviously, the major piece of event, or I guess the news that came over the weekend was this negotiation between the US and Iran on a memorandum of understanding. Looks like we have an initial agreement whereby which you will see the strait reopened, the blockade will be lifted, and obviously kind of like a pause for 60 days while the negotiations go on. So this is still being digested by the markets. What the longer term implications of this, but we're taking it on firm footing. The oil markets are trading lower, gold is trading higher, dollar is trading lower, stocks are trading higher. We'll go over all the US dollar crosses today: euro, sterling, Aussie, CAD, yen, Swissy, gold with a nice little rebound, oil, Bitcoin, and take a quick look at the SPX, the NDX, and the DJI. Any other questions or trade setups, as always, feel free to throw them on the message board. Let's jump right in. Here's our last update on the US dollar. This was published back on the 6th, or on the 4th rather, of June. And the focus was this recovery testing resistance at 99.50. And that held for 3.5 weeks, guys. It's the 618 of the drop. It's the objective January high. We broke through that 2 weeks ago, and that rally exhausted last week right into technical resistance. 100 spot 15 to 42. You're talking about the 2024 swing low, the 2024 low week close, and this year's high week close all converge on that zone. We halted there last week. Here's the pullback. Now, obviously, the news that we are seeing some sort of resolution here, really quelling some of those market concerns, and more so impacting interest rate expectations. It is a Fed week. We have a host of central bank rate decisions on tap this week, guys. The FOMC, obviously, the Bank of England, the Reserve Bank of Australia is tonight. The BOJ actually expected to hike 25 basis points. So aside from all that headline event risk, we do have some major central banks on tap this week. So because of the resolution, or in response of this seeming resolution to the conflict, you are seeing interest rate expectations start to abate a little bit. Last time we looked at this, guys, last week, we saw that at one point, markets were pricing in a 70% likelihood that we're going to have to see at least 25 basis points by December. That's eased a bit, okay? It's eased a bit, just below 60% here. But at the end of the day, the sooner the resolution, the quicker this all gets resolved, the strait reopens, we get all that clearance, the more the concerns that the inflationary pressures are building will start to ease, and that might ease expectations that the Fed will need to move to tighten. This time around on Wednesday, when we get the Fed rate decision, we will be getting the updated summary of economic projections. Here was the last one back in March. Remember, they increased their growth prospects for 2026 from 2.3 to 2.4 on GDP, whilst at the same time increasing their inflationary forecast from 2.4 to 2.7, even core PCE at 2.7%. So the focus for the markets will be what changes are made to these two reference points on inflation. Obviously, the GDP figure, we'd love to see that steady, if not even move higher. But the focus is, okay, if a resolution really is at hand, and the timing of this, guys, couldn't be better, right ahead of the Fed rate decision, getting some sort of resolution. Now, to be fair, as far as the straits are concerned, the true reopening and the free passageway isn't supposed to take place until Friday, when the agreement is signed in Switzerland between Iran and the United States. So we are still in this precautionary lull, but it seems that the data or the headlines that are starting to come from both sides are suggesting that the resolution's at hand. So with that being said, if the Fed readjusts its inflationary outlook, that would be a call for potentially having no hikes this year. At the same time, guys, the focus will be really on the presser and how Warsh kind of conducts himself here. Remember, he's one who believes in not so much less transparency, but less what's the word? I can't find the word I'm looking to use, but less assumptions, really, right? And more, this is the data, here's how we reacted, waiting for incoming data. So we might be a little bit more in the dark, which is kind of, I think, where Warsh wants it. And we could see those expectations shift. Obviously, the dot plot is going to be central focus as well. We saw that cluster really start to gather for a hold potentially for the majority of this year. So we'll see if that shifts, if there's a move for or an appetite for hiking. One other thing that Warsh is going to have to face tomorrow is there was a call from other committee members last time around to remove the easing language from the statement. I don't think he's actually going to necessarily be against that. So now, if that does get removed, again, that's further a further call that the Fed's likely going to be on hold for the rest of the year. So what does that mean for the dollar? We took a segue there and dived into the Fed, but I think it's important as we head into the release on Wednesday. By the way, this is where the link will be. I'll include it in the chat box on Wednesday. So that's the link you can find. It'll show up right here with the PDF for the most updated projection material on Wednesday. I'll also have that link for you on MB Forex when it comes out on X. So for the DXY, here's what it looks like on the daily chart. Our last daily update was published right here on the 9th. And the focus here was the fact that not only were we basically testing this resistance zone, but we were also seeing a break of the monthly opening range high. And it puts excess, even more significance on a pivot above that zone needed to mark the next leg higher. Here's what happened on Friday. IPO day, got a large market reversal, outside day reversal off resistance. This was Thursday, excuse me, which moved lower. And then here's Friday's candle. Now the gap into the open on Sunday took us right into support. 99.50, former resistance, January high, 618 of the March drop, all right there. Even the May highs are right there on slope support. We're looking for a reaction here. Drill down even deeper. Here's the 4-hour chart. And here's what the 4-hour chart looked like earlier in the month. So we came right into that zone, tested slope support, right? And then we came for another test on Thursday, reversal. We're now trading right at support. We're right here. Okay. If DXY breaks and settles a daily close below 99.50, that would be a break of the May uptrend. The next and initial support level in such a scenario calls into focus the objective June open, which comes in at 98.96, excuse me. Okay, so this is a major pivot, huge pivot. Don't take my word for it. There it is. If we break below this, threat is for a test of the June open. That's 98.96. Key support, the level that would need to break for the bears to reassume control, is the May low, the August high day low, the high day close, and the 200-day moving average that gives you basically just below 98.60, 98.68. So initial pivot being tested right now. Monthly open support 98.96, key support 98.68. Resistance doesn't change. 100 spot 15.35. That's still critical. Now, just for near-term sake, the Friday close does come in at 99.80. So if we are just to go fill the gap, for example, and then move off, just keep that level in mind. That's 99.80 on the Friday close. This is still key resistance. Breakout, you're looking for 165, 100 spot 77. So this is absolutely critical. Obviously, we have the FOMC rate decision on Wednesday. Likely to see a little bit of a lull as we get into that release. But the DXY is poised for a potential pullback if this breaks. Now, if we close today at this level or above this zone and we best the Friday close, that would shift the focus back for a test of key resistance. So the levels are very well defined. DXY waiting for some major event risk on tap. Now, outside of the US dollar, you still outside the FOMC, you still have retail sales on tap this week as well. Okay. Here we go. And that's supposed to be on the same day. So expecting to show a print of 0.5% on hold. No change there. Questions on dollar. All right. Number 2, here is euro dollar. So I put out a piece on this over the weekend, and I was really just covering the weekly forecast for the longer term picture. And here's what it looks like. We're trying to pivot through a major key zone right here into the open of US trade. So 1578 into 1598. 1578. Into 1598. That was the 618 of the rally off the yearly low. It's the January low close. And last month's swing low is right there as well. So we were looking for a reaction there. The break rebounded right off the median line of this weekly chart. This is the same pitchfork we've been tracking since January, guys. The median line was support. Here's what we were looking for, a reaction there. We got it. At least initially, looks like it wants to break higher. Now, the resistance zone on the weekly chart is going to be the 52-week moving average. That's 1673. Okay, that's right here. It converges on downslope resistance over the next 2 weeks, right around 1673. So the weekly chart isn't the sexiest. It's showing a rebound off of downtrend support and a potential pivot here above a major lateral level. So what does that mean for us on the near term? Well, here's the last daily chart. This was published back on the 5th. But the focus was, do we get that drive towards 1482? We didn't quite get it. The market turned right ahead of it. The low, I think, was 15 proper. And then we made that reversal candle last week. So here's what the daily chart looks like right now on the euro. Okay, and here's the side-by-side comparison. So didn't quite make it to that 1482. There's the turn. There's the rebound right off the median line, right off this zone. And then the pump higher, looking like it wants to break not only above that lateral zone, 1578, 1598, but basic channel resistance. So this channel back here was taken off the highs. That side broke. So we re-amended it just to this new low. And that new slope looks like we're trying to make a break of that key pivot zone. Again, a major pivot in price. Look at my cursor all the way to the left, even back to August of last year, the January lows, really nice zone. Drill down even deeper. Here's the 4-hour chart. And here's my apprehension on the euro. This pitchfork has been really clean. We've been tracking this one right off the highs. And right now, well, this is actually the previous pitchfork. Here's the pitchfork we've been tracking right off that secondary high, right? Resistance. What is that? Is that the break? We pivoted above 1578, 1598. If we look at this on paper, technically that is a breakout, but slope is in the way. I always try to bring it back to basics, guys. Remember, slope is subjective. I might draw a different pitchfork than Roland, than Jose, than Febby. We might draw connecting the peaks or the closes. Lateral levels are objective. Doesn't matter where you are in the world, what technique you're using. That is the 618. That is the January low, plain and simple, exclamation point, end of paragraph. So on paper, it does look like a breakout. The test is going to be if we're able to stabilize above this pivot zone. If we close today back below, well, that's your quintessential exhaustive trade off of downtrend resistance, right? Momentum is not overbought yet. If it wasn't overbought, I actually feel better calling this a breakout, but we're not. So looking for a reaction here. If euro is heading lower on this stretch, I would want to see the lows from Asia hold. Okay, that's 1567. Next level up is the monthly open, 1659. Just higher, the 200-day moving average at 1676. So 15 pip zone of resistance here if that downside holds. If we break back below the Sunday low, you're looking for a potential resumption of the downtrend right back into 1483, which is what we missed last week. Makes sense? But pay attention, because those outside day reversals manifested on, we had one right here too on Euro on Thursday. Took out the previous day's lows, closed well above the previous day's highs. These are your quintessential exhaustion. We had it on DXY, we had it on Euro. So if we do maintain stabilized northbound of 15, basically 16, the 16 handle here, it would suggest the potential for a near-term breakout in price. Make sense? By the way, we'll be tracking this every single day. Quick reminder, if you're on the state side and trading with Forex.com, you now have unlimited access to the opening bell, which is a webinar that we do every single morning at 9:30 Eastern. Very much same scenario or same setup that we do here on Mondays. And we go over all the day's setups, major event risks, and the key levels that we're looking for. So if you're not able to join live, it is published daily on our YouTube channel, Forex.com. Special welcome to our YouTube channel guests, by the way. If you do have a minute, please like and subscribe. It'll always keep you updated with the latest videos, as well as a quick free way to show your support for the channel. All right, so that is Euro. Trying to take a stab at resistance here, pretty darn close. Watch the close. Sterling is still one of those trades where it's not my favorite, but it looks like it may be getting a little bit cleaner sometime soon. Here's our last Sterling update. This was written back last month into the close of the month. And it's been a messy trade. It's been a messy trade. We broke below that upslope on the 5th here, and then we just jumped right back in it, but we're still holding the 52-week moving average as resistance. We're still holding the monthly open as resistance. We're still holding the yearly open as resistance. So like, if the daily chart gets this kind of messy, well, I'm sorry, I didn't show you the weekly chart. That's the weekly chart. Here's the weekly chart side by side. So what is this? Is this a break? We just dropped, turned ahead of support, and we're still holding right ahead of resistance. The yearly open, guys, comes in at 34.74. The 52-week and the 200-day are right here. So you're talking about some serious moving averages, and then the 618 of the drop from that high that we made back in what was that, April, is right there as well. So look, you're trading right below a stack, 3 stacks of resistance. Yearly open, 200, yearly moving average, 200-day, yearly open, and the 618, all stacked up. 34.26, 34.74, and 35.22. So I'm treating this as a near-term consolidation. I don't really have a strong bias on this. Here's what the British pound again looks like on the daily chart. This is a different slope. This is the slope that we were tracking here on the daily chart. This was highlighted back right into the open of the month. And that's the slope that looked like it broke last week and then pulled right back into it. Look, on its face, you have a pretty sizable monthly opening range right below resistance. Again, the monthly open, the yearly open, all right there. Drill down even deeper. Here's the 4-hour chart, and here's what the 4-hour chart looks like now. Is that the same slope that we were using in that report? No, we're using a different slope here. So here's that 200-day moving average. Remember, the 52-week is right there as well. Here's the February low day close, the yearly open, and here's that 618. You're stacked with resistance. Listen, the breakout scenario would be a pop through 35.22. That would be the breakout. That a more significant low is in place and potential resumption of the late March uptrend in the sterling. Till that happens, you're still ranging right below resistance. So my least favorite of the lot. Do keep in mind that we have the BOE rate decision on tap also on Thursday. They're expected to hold, so no changes expected there. Sterling trading right below resistance into the open of the session. Key support comes in at 32.66, 32.90. That's the level that would need to break to mark resumption of the downtrend from last month's high. You're looking for 32 and 31.50s in that scenario. But right now, you're kind of just straddling that moving average. Look for a breakout in sterling in the days ahead. BOE on tap Thursday. Least favorite of the lot. All right, Aussie. RBA's on tap tonight. No changes expected. Here's what Aussie looks like on all the time frames. So look, we might have put in a more significant exhaustion low last week, but that remains to be seen. We're looking for confirmation of that. Here's our last update on the Aussie weekly charts. This was highlighted on the 11th of the month, and we had broken the median line for this multi-month, you can even say multi-year formation, 71. Remember, for the last couple of weeks, As a quick reminder to anyone who's new to the room, on all my reports, you'll have the weekly forecast, which is the weekly chart, and then you'll have the same asset with the outlook or the short-term outlook, which will give you the daily and the 4-hour charts. Also, on every single one of my reports, in the first paragraph, you'll have a link to the previous update so you can see how we've been faring on the setup. You can see here back last month, we were looking at that same 71 support zone. Once that 71 support zone came into view, we were looking for 70 and a potential drop towards the March close. We highlighted it last month saying, hey, we broke that level. Here's the drop. Look for reaction near 69.56. Well, we never got to 69.56. We turned and we exhausted right there last week, and we almost marked a doji, not quite. We did close higher on the week, but is that an exhaustive low? Well, resistance is 71.16, so we haven't broken resistance yet. But basically, we're rebounding right off the 25% parallel. Interesting stuff, right? That's the weekly chart. All right, well, let's drill down. What does the daily say? We highlighted this one. This is even older. This is from last month, but just to show you how it panned out with that 71 break, here's the Aussie chart now, and here's a side-by-side comparison. So once that 38.2 gave out, 50% extension made quick way. 70 was right at the 70 handle. Came a little bit later than expected, ahead of slope, but there it is. And again, Thursday, stop traffic. Another outside day reversal off of downtrend support. So it suggests that near term, you still have the potential for a little bit more of an exhaustive push higher. 71 is now resistance, 70 support, critical support, still 69.42, 69.13. Drill down even deeper. Here's the 4-hour chart, and here's what the 4-hour chart looks like now. Okay, so same slope. Yep, same pitchfork we've been working with all month long. We came into the lower parallel, the 618 right here, out here in time now. And we were talking about this in the opening bell on Thursday saying, hey, look, if that was a break, man, this thing needs to accelerate. A break of downtrend support oftentimes can be the sharpest part of the drop. Momentum was showing divergence. And so Thursday is where we curbed our appetite for the short side. Lo and behold, later that day, you saw a massive reversal. And again, we closed right below the weekly range highs for last week. We're trading there right now, 70, 78. 71 is right there. If we pop back above 71, it would suggest, again, a more significant low may have been registered, potential for a larger rally in Aussie, resumption of the uptrend. So RBA is on tap later tonight. They're expected to hold as well. Devil's in the details in the accompanying commentary, obviously, but we are at near-term resistance. We've rebounded off of downtrend support. Look for a reaction here. 70 is still key support. That's the break you would need to see to go look for resumption towards that major uptrend from last year. Anything northbound of 71, you want to kind of go neutral on this one because that could be the potential of a pivot right above that key zone that was holding for almost 3 months. Decision time for Aussie. Questions on Aussie? Okay. Similar scenario with dollar CAD. So with dollar CAD, remember in the opening bell last week on Thursday, this one looked like a legitimate breakthrough of 39.82. That is a huge region. And we said we wanted to see a close above that on Thursday. We didn't. We closed back below it. Then Friday, we did close above it. And then here's the open of the week, now straddling it. This is like, it's the same scenario as Aussie, not quite in the positioning style because this is not really at the extremes, but here's dollar CAD attempting to break the objective yearly opening range highs. Here's dollar CAD attempting to break the objective 38.2 retracement of the decline off of last year's high. Here's dollar CAD attempting to break the 2022 swing high. So what is this? Is that a break? Remains to be seen. Dollar CAD's at resistance. That's all. That's the only thing that's the conviction call for dollar CAD right now. We're testing a major pivot zone in price, right? Here was our last dollar CAD update on FOREX.com. This was written back on the 8th of the month, and this is the same exact pivot zone we were talking about. Now, again, last week we pushed through. We closed right above it. But man, if that's a legit break, we want to see some follow through. Momentum is just now trying to break 60 for the first time, essentially since, what was that, February of last year? So this is a big zone for dollar CAD, and we are testing resistance as we speak on the weekly chart. Here's our last short-term update. And this was written back on the 4th of the month as we were testing that same key zone. 39.15, 39.42, you got the 2026 high day close, you got the September high day close, and October low day close of last year. We were looking for a reaction there. Here's the live chart now. Okay, I've cleaned it up a little bit. So we popped into that 39.85 region. It's the 38.2 of the entire decline from last year's drop, and now it's the 2022 swing high. So that's what this is right here. The 2022 swing high, amended from that 764. I just added 38.2 instead, but it's the same zone, 39.82 into 39.77. Here's what we look like. We closed above it on Friday. We're trading just below it right now. There is an overbought condition. So the potential for this breakout still being viable remains if we're able to close northbound of 39.83 today. So I'm not giving up quite yet, but it is at risk of exhaustion. If daily momentum settles back below 70, and especially if price breaks back below 39.42, you're in trouble. Here's what the near-term chart looks like. And guys, that's the same slope we've been tracking. No change. No change. Here's the test of support right there. Rally, break of the median line support. Pivot below the median line resistance, pivot above the median line, support, and now it's resistance. So for dollar CAD, initial resistance 39.77, 39.85. The weekly range high, by the way, comes in at 39.91. So let's just watch this whole zone. Initial support 39.42. You need to break last week's low to validate a break of that late April uptrend. Or early May uptrend, right? So this is a 3-point touch confirmed slope now. There's last week's low. That gives you 39 proper. If you break 39 proper, it would suggest a more significant high is in place, a larger trend reversal is underway. You're looking for the objective monthly open. You're looking for the 200-day moving average. You're talking about basically 38. Now, topside breach, if we're able to manage a close northbound of 39.91, not too far off is 40.35. That's the 100% extension from the advance off the low. So 1, 2, 3 gives you 40.35. Just missed it on Thursday. That's your first topside hurdle if we see resumption of the uptrend. As far as data is concerned, you're pretty limited out of Canada this week. It's going to be really dollar driving most of the price action here. So keep an eye on that. Obviously, the resolution of the war has implications for oil prices as well. So something to keep an eye on. What catalyst do you think dollar CAD needs to either break up or on the downside? So I think, listen, Addy, right now, put things in perspective. Right now, the resolution of the war, the dollar has been, I guess you could kind of say it's been playing the haven trade, right? But the resolution of the war has largely been a dollar negative thing. Why? Well, Addy, it goes back to the Fed outlook. If the war is going to be resolved and oil prices are going to decline, the concern that oil is going to further fuel inflation is going to limit the Fed's necessity or need or willingness to hike rates. And so what does that mean for the dollar? That the dollar has been largely benefiting from that expectation that they're going to have to hike. They're going to have to hike. Oil is high. Inflation's running high. We got 5 point something on PPI, right? But if the inflationary concern is starting to abate, then that's going to be dollar negative. And you're seeing that. Now, Addy, interestingly enough, for dollar CAD, the downside has been more limited when compared to euro, when compared to what you're seeing the DXY do, which is a benefit, which is something telling you that the broader push still remains with the bulls. And that's also visible by what's happening in momentum. So a catalyst, Addy, there's a million ifs that could come up. A breakdown in negotiations, something happens on that front. Obviously FOMC on Wednesday has big implications depending on what war says and what the dot plot shows and the economic projections, the summary of economic projections, the SEP. So for this week, that's definitely going to be the largest, most significant potential. Okay, yes, Addy, right? So a hawkish FOMC versus USMCA renewal. I don't know if the USMCA renewal is really going to be quite as big a hit, but the FOMC for sure, for sure. I think the USMC is like a sleeper cell. I think that's going to become something, but right now it's not quite in focus. Does that make sense, Addy? Good question. All right. So that is dollar CAD on all time frames. Next up on tap is Japanese yen. So the Japanese yen is testing major resistance. On the 3rd of the month, I put out this weekly chart, kind of just giving you guys a heads up. You know, this is not my favorite trade. In fact, this is the least favorite trade of all time for me is dollar yen. But here we are, 160.30, 160.73. Guys, that's intervention level, okay? It's where we topped out the yearly advance. It's the 2024 high week reversal close, and it's the close high for this year. We ran right into it. This is the 3rd consecutive week we're holding that resistance zone. Again, this is where the Japanese officials jumped in with the intervention. The technicals would suggest you're butting up against resistance and strength beyond 60.74 would be a major breakout. The fundamentals suggest you're playing with fire. So take it for what it's worth, guys. Dollar yen is trading above or into resistance. A pop, a close, northbound of 60.73. There's nothing till 61.95. That's just the swing high from 2024. So the potential for a larger breakout. Weekly support doesn't come in till last week's high week close. That's 57.70, bullish invalidation at the yearly open. So the levels are clear. Momo is not. Okay. Now you drill down deeper. Here was our last short-term update. And this one was published on the 12th of this month as we were testing that key zone. Uptrend resistance was also there. So you had a channel that was converging on that zone. Here's channel support. Here's your monthly open. The monthly range is set right below resistance. Here's the live charts now. Same picture, different day. Okay. That outside reversal candle we made on Thursday pulled right back. Here we are ranging still just below resistance. Drill down even deeper. Here's the 4-hour chart, really tight ascending pitchfork off the lows from last month, converged with the median line right there. Here we are again. Same picture, different day. Right below resistance. Monthly open support 59.27. That's near-term bullish invalidation. If we break below the monthly open, it would necessitate a break below the objective monthly opening range. And that in and of itself would be a near-term bearish bias. You're looking for 58.55. You're looking for that 57.90 zone. Top side break above 60.73. Like I said, 61.68 is the 2024 high day close. The actual swing high gives you 61.95. Big intervention risk, but levels are clear on dollar yen. Zainep, can we take a look at silver today? You know what? I think you asked that last week and I didn't get a chance. Let me put it on the list. I think we're making good time. After we hit gold, yeah, let me see if I can hit silver for you. I haven't taken a look at it, but more than happy to work out the levels. Last but not least on the FX front, here's Swissy. So last week we were suggesting, hey, it's a long bias, but man, that long bias looks pretty vulnerable, and it did kick back as expected. The level was 80.09 on the weekly chart. That was the objective high week close. So the week that the high was registered, the close of that session was right there. The break and the pivot that we were watching for weeks was the yearly open and the 618 of that drop off the yearly high that gave us 79.35 into 79.25. That broke. The 52-week moving average is there. Shifted our focus to that high week close that held yesterday. Here's now your test of former resistance, former support turned resistance, turned support again. I'm looking for a reaction here today. Where's Roland? You in the room, Roland? This is your puppy, right? This is a major inflection. This is a major inflection. Here's our last Swissy update on FOREX.com. This was written right into the open of the month. There was the break. There was the test of resistance. We're right back at support. Major pivot zone. So no change to any of the levels on the weekly chart for Swissy. Drill down deeper. Here was our last daily chart. This was highlighted on the 10th. We were focused on, hey, we had broken that pivot. Here's the high day close. Threat for exhaustion. You had a 3-day rally. It ended up being a 4th day rally, but you were testing the high day close. Momentum looked like it was a little vulnerable. We were looking for reaction off that high day close. Initial support back at the yearly open at that 618. We dropped right there. Here's the live chart now. Not only did we drop there, guys, but we dropped on an outside day reversal, right? So the following day, right after I rewrote this, the following candle marked an outside day reversal, taking out the previous day's highs, previous day's lows, 79.25, 79.26. We're right there. We're right there right now. Okay, look for reaction here. Drill down even deeper. Here's the slope that we were looking at. And while we were looking at that same 79.93 level, that high day close, we noted, hey, the 25% parallel is there too. So you got more uptrend resistance. You drug. That slope held, and then you finally reversed. Here's the live chart now. And here's the side by side. So you continue to press, you continue to compress, and you showed some divergence. We talked about that on Thursday, all into that high. There's the reversal. Here's your first test of uptrend support at the 25% parallel and that major pivot in price right there. Even back to last year, guys. Look at this. So I'm looking for reaction here. Just lower. The 200-day moving average converges on that lower parallel basically into tomorrow, Wednesday, near 79 proper. If we break this, that would invalidate the May uptrend. 78.75, 78.73. That's the break that would put the bears back in control. So we're looking for potential downside exhaustion here in this zone, bullish invalidation, or the level that would put the bears back in control is anything sub 78.75, 78.73. Make sense? That's Swissy for you. All right. That's everything on the FX side of things. If you have any other questions or trade setups you want to review, Roland says, cool, thanks on yen and Swissy. You got it. Let's jump into the commodities. Here's gold. So I think we can start to assume that a more significant low is in play. And there's a couple of different things that are helping us or pushing us towards that assumption. Where and when we turn. So here is our last update on gold. This was written on the 6th of the month. And we had already suggested that a yearly support zone was in view right at that 52-week moving average, and just lower was that 618 extension. So you had the 52-week, the objective yearly moving average converging on that slope. And then we had the 1618 off the high and the objective October high week reversal close from last year, giving us 40.74 into 41.12. We wanted to look for a reaction off one of these two levels. The drop continued the following week. We dropped, we skirted just below 40.74, and then we closed above what? The 200-day moving average. We defended it. And not only did we defend that moving average, we defended the 25% parallel for the slope we've been tracking since 2024. This is the same pitchfork. You see that? You can't make this stuff up. So is that a more significant low? First thing we look, let's see if we can see, get a breakout of some downtrend resistance, right? But that certainly is a really nice spot to kind of find a more significant rebound. So that's the weekly chart, right? From 1,000 feet up, drill down deeper. Here's our last short-term update on gold. This was highlighted back on the 28th of last month, right after we made the initial tag of that 100% extension, 43.83, 4,400. We pivoted back above. We couldn't close above 45.30. And then we made that last drop into key support last week. Here's what the live chart looks like now on gold. Okay, and here's the side-by-side comparison. So there was the yearly open break, dropped into that 618, the 100% extension that broke. The level that we eventually rebounded off of was below that 100% extension. It was the 618 off the high at 40.74. There's the reversal. Here is the focus into the start of this week. If we close northbound at 42.24, 42.50, the median line is there. This formation caught the lows. The 75% parallel caught the highs. The 75% parallel now converges on a major resistance zone. Look, if we close northbound of the yearly open today at 43.19, it keeps the rebound in focus. The first major level is the 200-day moving average that gives you 44.50. And then key resistance is just higher into 45.40. That's the objective monthly open and the objective monthly opening range highs. Not to mention, it was the low week close from March, not 2026 anymore. Let me change that. We have a new low week close, but the March low week close is right there as well, was the opening range lows last month. That's now resistance, converges on downslope resistance. Okay, so gold does have the potential for a little bit larger of a recovery here. Initial resistance, you can watch 43.83 still. That's going to be a pivot, but there's a 200-day moving average and that key zone just a bit higher. Okay, now if we settle southbound of 42.24, I want you guys to keep an eye on this. Let's remove the October reversal close and stretch this down to this zone right here. I'll have an update, guys, write up about this later this week on FOREX.com, but just a quick preview. So the new low week reversal close comes in at 42.12. That 100% extension off the high comes in at 42.24. That's now near-term support. I need to see that support hold if gold is heading higher on this stretch. Close above 43.19 today would reinforce that resistance. Again, 200-day moving average is 44.45. 45.40 is the major resistance that would suggest a much more significant low is in place and the potential for a much larger trend reversal. Make sense? It's the low day close. Boom. Near-term support, initial resistance, key resistance on gold. So if that's gold, who is that? Zinep. You want to look at silver. Let's take a quick look at silver. Okay. Let me go start off on the weekly charts first. All right. Wow. Wow. You can't make this stuff up. Do you see this? So silver went for a test of its 52-week moving average to the pip, man. Literally to the pip. You can't make that up. Oh my gosh. That's a perfect rebound. So I don't think it's quite the same conviction as the gold trade is. But let me see if that same pitchfork offers. Okay, so let's do this real quick. Excuse the silence, guys. I'm just going on the fly here for Zinep. So I'm going to do this. Take that basic slope, match that slope. You could see some pretty decent reactions along the parallels here. Really nice inflection along the median line. The monthly open converges right on pretty close to that 75% parallel. Let me see if there's a... Yeah, it's not the cleanest setup. That's your low day close for the year. Oh, we didn't register. Okay, this is actually really important. Thanks for bringing this up, Zinep. So non-confirmation low identified. So a non-confirmation low is when related assets, one of the related assets registers a new extreme in price and the other one does not. Oftentimes, this can be very indicative of larger market turns, reversals, or exhaustions. So here you can see, for example, in gold, you registered a new yearly low, surpassing the March low, whereas in silver, you did not. So that non-confirmation low on related assets suggests that there might be something up here for a larger recovery. That's one thing to keep in mind. That's pretty interesting. And that also keeps in mind that this is still your low week close, your low day close for the year. So let me drop that. It's not like gold where the low day close was last week. This is still your low day close at 69.14. And then you have the 200-day moving average. I'd still be looking for support there for heading higher. I'd still be looking for support ahead of that 200-day moving average, 68.43, if we're heading higher on this slope. Now, initial resistance is 72.15, and then it starts to stack up because the yearly open, the monthly open comes in just a bit higher at 75.30. So whereas in gold, we know where we're gonna sort of sorry, that's oil. We're in gold, we know kind of where we're gonna invalidate the downtrend. Zinep in silver, I still think you got a little bit more to go before that level becomes a little bit more obvious, right? Because the slope doesn't quite match as well. Look for a break near term, look for a break above 72.15 and a close with momentum above 50. That should be an initial hallmark of the potential for a gathering rally. Obviously, guys, everything I say in the room here, nothing should be misconstrued as a trade recommendation from FOREX.com or StoneX, guys, just my humble interpretation of what the technicals are suggesting. But this does look like it has the potential for something. You want to see stabilization above 68.43 if this is heading higher. Does that make sense? And then once we get a little bit more back and forth, you look for a potential upslope, which I don't think you have right now. Something, I must have checked this out last week on oil, on gold, but something I was looking at, if this is a more significant low, and if you take a basic retracement just of the decline off the May highs, the 38.2 is pretty darn close to a basic 25% parallel here into Thursday. Might be something to play with. I don't know. I have no conviction on this slope just yet, but something to consider later in the week, Zinep, if we do start to head higher. Make sense? Hope that helps. All right, gold and silver. We covered both of those. Here's oil. So I've been telling you guys in the room, one level that matters most out of everything ever since the initial March breakout was what? 85. Why 85? Ladies and gentlemen, 85 is the high day close for the year. That March 9th panic rally towards 119 closed that day down here. Ever since that one candle, it was support later that month. It was the low day close in April. Can't make that up. And then again, we were looking at a support right here. That broke. That clears that multi-month consolidation and drops us into the next lateral zone of support. I tweeted this, putting my age out there. I put an X on this last night, as it was happening, as soon as we got the release from the administration. This is your next major pivot, 79.60 into 80.49. That's a basic 618 retracement of the ascent off the lows that you made the rally off the December low. Sorry, I lost my place there. And it's also the 2025 high day close and the 2025 swing high. In case that wasn't enough, it's also the objective April low. We're there right now. So this break suggests that the multi-month consolidation pattern may be giving way. This break would suggest resumption of the downtrend from March, in which case you're looking for 73.84. That's the 100% extension off the highs, 2 equal legs. By the way, that's from the high in April, not the actual emotional stretch high we made in March. And I do that because I don't want to get too into Fibonacci theory here, but if when I'm taking my extensions, I want to use trend-based extensions for when you're using the expansionary tool. And the best way to do that is to look at it on a line chart to register where the actual trend reversal happens. So if you're looking at a line chart, it looks like that was the high and that's where the trend reversal started. But from an actual technical standpoint, that was the close high. And this is where the downtrend started. So that's why we use this for the 100% extension, which converges right on the 200-day moving average at 73.56, 73.85. That's the threat if this breaks. Oil sitting at support right into the open to 79.60. Questions on oil? All right, obviously subject to headlines, but everything held constant. We're testing a major pivot here. Let's look for a reaction off 79.60 into the 80.50 zone. Okay, last but not least, Bitcoin. And then we'll take a quick look at what's going on in the equity market. So we're getting a much more significant rally. We talked about last week the low week close for the year at 60.85 being support. We tested that on Tuesday and Wednesday before rallying. So before we get into the daily chart, I want to show you the weekly chart. A couple things are up here. So if you guys recall, or if you haven't, go check it out. The yearly trade of the year that I wrote in January was for Bitcoin. The two levels we had talked about as possible targets last year for this crypto winter were 57,885 into 58,725 and 52,204. We were looking for a low off one of these two levels into the start of the year. Okay. Now here's the drop and here's the rebound. Is that the low and we just didn't fully extend? Potentially, but it's too early to tell. What we do know is that that is a clearly technically significant zone. This is the 6180, the entire rally from 2022. It's the August 2024 low week close. It's uptrend support from 2023, and it's downtrend support from last year's high. This is a big zone. So you don't want to be a stickler. It has to hit that zone. I don't know. Maybe that was the low. Maybe I don't know. What I do know is that there's clear identifiable divergence. Price action with a lower low, the oscillator with a higher low. I do know that in time, that level mattered based on slope, right? Slope is our time assessment. Lateral levels are our price assessment. Really good spot. So I'm tempering my expectations near term. Look, here's the daily chart. This is now going to be our third consecutive daily advance if you count that doji day that we made on Friday there. But rebound off support. This now on Friday or on Sunday, yesterday, broke the 25% parallel and the March low. That was initial resistance. You're now looking for a potential climb towards just a basic 38.2 of the May decline, 68,166. That's initial resistance. Now, bearish invalidation, the level of which, if broken, would suggest, hey, you probably have a low in place, is 70,283, 70,531. Well, there's a new low close, but this is the February low week close. Let me add that distinction now that we have a new low. It's the February low week close, and it's the February low day close. Nice pivot in price. That would necessitate a breach above the median line. And that to me would suggest, okay, you probably have a more significant low, at least near term in play. Near term support, 64,955. Let's just call it 65,000. Want to see that low hold for heading higher. If this breaks and you pivot back below the 25% parallel, you probably do get a strike of that key support zone. So it's really decision time. You're coming off of downtrend support. You've broken downtrend resistance initially. The threat is that the recovery gets you a test of downtrend resistance, if not a basic 38.2. We'll look for a larger reaction there in Bitcoin. If sentiment starts to turn more positive, broadly speaking, we actually might be on par here. Remember, guys, back into the start of the year, the time value, we did a time value assessment analysis for the last couple of crypto winters. The time values for September, October low, and those were the two levels that we had calculated. So we're pretty close. We're pretty close, right? We're heading in mid-June. So keep an eye out there on Bitcoin. Questions on Bitcoin? Jacqueline says, can you share the intraday levels on Euro one more time? I'm sorry, I missed it. We're running low on time, so I can't necessarily jump into those levels again. Here's real quick. By the way, on YouTube, Jacqueline, this is already ready to go. So you can go on YouTube and check the archive at any time and jump right in there. But Euro is testing a break of downtrend resistance. All right, last but not least, I did want to just take a quick look at the equity market. So boy, oh boy, what a reversal, what a recovery. We're right back. The level of support or the major pivot zone was 74.48. We had an outside weekly reversal 2 weeks ago that took us back below that. Last week, that was resistance. or the previous week, it was resistance. We're trying to break through it. We closed above it again last week. So does that mark resumption? I think we might be in for a potential test of 76.77, which is the level we missed just ahead of that last turn. That's the 618 extension from the advance off last year's low. 1, 2, 3. That's the 618 extension. Zoom into the daily chart, or this is the 4-hour chart, really. This is the daily chart. But just to show you, that reversal we made on Thursday was an outside daily reversal off of the monthly low. Okay, and took us right back above that previous swing low that we were looking to recover. So this does look like we're in a constructive stance. The monthly open comes in at 75.77. If we are heading higher on this stretch, any pullbacks need to be limited by that 236 at 73.11. Initial support 74.48. Monthly open resistance is 75.77, and key resistance 76.77. That's still paramount. That converges on the upslope over the next couple of days, by the way. So that's the S&P 500. Obviously, a lot of this is going to have to do with what the Fed welcomes us with Warsh's inaugural FOMC decision, what kind of tone he sets, what kind of willingness he has for easing in light of the inflationary outlook that we have, and throw in the variable, if we have a resolution to the conflict in Iran, does that put even more pressure, or at least open up the door for striking those expectations of a potential hike this year? Here is the Dow, or excuse me, the NASDAQ. NASDAQ defended a major support level, and that was really welcomed last week. That was 28,219 to 28,324. It's the 100% extension from the advance off the 2022 low. And this is the 618 extension from just the breakout of this year's opening range, which happened in April. So very nice pivot in price. The median line is right there. Perfect bounce there and hold. Actually closed a positive week last week. So that's still key support. Okay. NASDAQ's constructed above 28,219. Major resistance on the upside doesn't come in until the next measured move at 32,481. But that is NASDAQ. I don't think I have a near-term chart on this for you. Nope, not right now, but major pivot in price. Last but not least, here is the Dow. I told you last 2 weeks, I've been telling you the Dow out of the three major indices is the one that has probably the most room to the upside, because it was last on the breakout. It cleared the early opening range, well delayed past NASDAQ and past the S&P 500. So really nice defensive slope support last week. Keeps this constructive. 52,000 psychological barrier. Next measured move is 52,951. That's a 3618 longer dated extension just for the advance off last year's low. Converges on upslope resistance over the next couple of weeks. So some room there as well. All right, that's everything that's on my end. Thank you guys for keeping this FOREX.com's most widely attended live webinar year in, year out. Appreciate you guys opening up the week with us. Apollo saying, hey, Mike, why is it that you like taking more time on currencies and quickly rush through stocks? Why not start with stocks? Well, because this is FOREX.com. Most of our clients are trading FX, Roland. Also, there's a lot more volatility for the intraday trader. And I'm an intraday trader. I'm a short-term trader, a swing trader, whatever you want to call it. And so the volatility opens up a lot more opportunities. Stocks are important. We'll always cover them. Sorry that you would prefer to have them in the beginning. Maybe I'll speed it up a little bit. But just because our focus is so heavily FX related here, and the commodities are also a key part of our analysis as well. So just throw that out there. Zainab says, thank you so much. Jose says, thanks. You are the best, Jacqueline. Cheers, Jacqueline. I appreciate that. Thanks again for another insightful webinar. Roland says, have a great weekend ahead and God bless. Hey, same to you. Guys, stay nimble as you head through all these central bank rate decisions. Obviously, Wednesdays is going to be the biggest, but don't forget, we starts off tonight with the RBA, the BOJ, then we have the FOMC, and then right the next day, that BOE rate decision should curve us right into the close of the week. Best of luck trading. I'll keep you updated as always on MB Forex. Till then, I will see you next week. God bless, guys. Cheers.